A lot of insurance agency owners who sell their business receive cash as the sole consideration for their asset. It could be because they are looking to retire immediately, and that's the only consideration that makes sense for both them and the buyer. It could be that they are risk averse and they don't want to hold any equity any longer. They've been doing it for years, decades, sometimes generations, and they just want to, liquidate their asset and have it cash on hand to be able to do what they want, even if they continue with the business post transaction. And others, they sell to buyers who may not offer anything but cash for the business. That being said, there are a lot of very highly acquisitive buyers in the insurance industry who offer equity as part of the consideration, of the transaction. For example, if someone was to buy a business for $10, they might pay $8 in cash and $2 of equity, meaning equity in the acquiring business. And this is, for a couple of reasons, really, intelligent on the behalf of the buyer. One, it's a clever and creative way for financing to work out long term. But mainly it creates a lot of alignment for the buyer and the seller. If a seller is selling their business and they're going to hold equity in the larger enterprise post-transaction, they're definitely going to be more likely to make really sound, good business decisions on behalf of their agency after the transaction is complete, because they're going to hold equity in the enterprise. And this is really appealing for a lot of sellers in the space. If you're looking to stick with the business for 3, 5, 7, 10 years potentially after the transaction, the equity that these agencies are offering have tended to perform very, very well historically, much better than money in the public markets. It's also really appealing for those who want to take advantage of the inorganic growth that they may have never, benefited from in the past. An agency owner like myself, who we grow our agency really fast, but we did so organically only, was really appealing to me when we were considering selling. Being able to benefit from the inorganic efforts of the M&A team and the enterprise as a whole, as they grew their business and I continue to grow what I could control. Everyone benefits from it. And I think there's a lot of agency owners who just don't want to give up ownership. They love the fact that they're able to own the asset that they're managing and leading, and making decisions on behalf of. And it's really appealing to be able to transition some of their equity into the equity of the acquiring business and still maintain ownership. You might not be a 50% owner of a $5 million business, but you could be a 1% owner of a $100 million business, and that's really appealing for a lot of sellers. So for whatever reason, it can be very appealing and really attractive for sellers who are looking to stay on and want to grow their asset post transaction in ways that they haven't traditionally.